I'm Helen Quinn from Dairy Australia. Thank you for joining us in this important discussion. The Productivity Project is an economic research project that we've undertaken to progress the Australian Dairy Plan profitability discussion, which highlighted that dairy farm productivity has been flat over the last decade. The work aims to improve our understanding of productivity at a regional and state level, understand the impact of climate, and understand how dairy competes with other ag sectors for land, water, and other farm inputs. The project aims to provide the dairy industry with an improved understanding of productivity growth on Australian dairy farms. This is important because in the long run, productivity and profitability are closely related. Productivity is focused on the aspects of profitability that a farm manager has more control over. That is, how efficiently resources and inputs are used to produce milk. Generally, a more productive farm is a more profitable farm. To help get today's discussion started, we've spoken to 6 respected people from across the dairy industry and asked them why they believe productivity has flatlined in recent years.
Productivity and labour really in my dairying career, which is nearly 30 years old now, hasn't actually increased a heap per person. So when we got going properly in the early 90s, we were sort of 850,000 to 1 million litres per person, accepting that Robin and myself were working fairly hard. And then I look at it now and we still don't hit 1 million litres 30 years later. We're still sitting around that 8 to 900,000 litres depending on the year and a few things how they're happening. So if you're looking around productivity, then labour clearly hasn't been a shining light of where we've increased.
We're competing locally and globally in an unequal playing field, in a fragmented industry with a volatile environment, and much of the technology and innovation that we're implementing is costly and does not significantly increase our productivity.
So one of the key reasons for the decline in productivity has been the volatility the last 20 years. So the extremes in milk price, climate, the droughts, the input prices leading to a poor profitability and lack of confidence. Some of the other reasons is we've probably had a really good gain in productivity during the 90s with the success of like the Target 10 program. So a lot of that low-hanging fruit's now been taken up, which means it's now the harder gains are now upon us. And the other key one is a bit of too much of a focus on silos or individual aspects of the farm business, not getting it pieced together. So things like nutrition, overemphasis, and then leading to poorer pasture harvests and a few things like that.
Volatility of input cost is probably the thing that sticks out in my mind, especially over the last 20 years. We've had spikes in grain cost, in fodder cost, in water cost, sometimes 2 of those things together, sometimes 3 of those things together. And I just can't help but think it's made us farmers a bit more risk adverse. We're not quite prepared to push the envelope like we were when the season starts were a bit more predictable. All of those things are climate change related. And I just feel that certainly in our instance, we don't want to get right out there on the edge because next year could be a bad year. We just don't know.
Productivity is what you make out of what you got to work with. And in the Australian dairy industry, productivity hasn't increased much the last couple of decades. The main source of productivity increases is technological change, new technologies, and new technologies come out of research. So if the productivity of an industry flatlines, it's because the productivity of the research sector involved hasn't delivered. And the research sectors are overseas research, private research, and our own publicly funded, levy-funded, taxpayer-funded research. So if productivity of our research sector is low, the productivity of the industry won't increase.
I feel that productivity has flatlined over recent years because it has simply not been an industry focus. Instead, generally speaking, we've been focused and concentrated on creating low-cost production systems and continually looking for ways to reduce input costs to the point where it is now affecting productivity.
There's some food for thought to get this discussion underway, so I'll hand back to our host, Sarah Thompson.
Good afternoon, everyone, and welcome to Dairy Australia's Productivity Forum. Today is the first of 3 exciting sessions that will be unpacking new research, findings, and evidence on dairy productivity and why it has flatlined over the past 10 years. I hope that video first up helped provide some context to what today is all about. My name is Sarah Thompson and I work in the Regional Services team here at Dairy Australia, and it is my great pleasure to be your host of these incredibly important sessions that make up the Productivity Forum. So let me tell you what we've got in store for you over the next 3 weeks and why it is so important that you attend all 3 sessions. Today, you'll hear the first of the findings so far, the raw research on what productivity is and the high-level messages of why dairy industry productivity hasn't improved. Next week, we'll take a dive into the detail where the rubber really hits the road as we unpack the regional differences in productivity and also explore the somewhat uncomfortable topic of diseconomies of scale when it comes to dairy farming. And then week 3, we'll look at how dairy stacks up against other sectors when competing for land, water, labour, and other resources. But most importantly, we'll bring it all home with what the dairy industry's response to these findings will be and what comes next. Now, before we get too far in, let me briefly outline some Zoom housekeeping to ensure you all have the best experience possible. If your internet allows it, please turn your camera on. We love seeing your faces and who we are connecting with. With your Zoom screen, you have the option of switching between gallery view and speaker view. Gallery view means that you get a Brady Bunch view of everyone that's online, and speaker view means that you get a close-up of whoever is presenting or has the floor. To maximise your experience today, I do suggest that you select speaker view, and you can find this up in your top right-hand corner of your Zoom screen. There should be a small white or grey icon that either says speaker view or gallery view. Click on that to alternate between the 2 screens, and hopefully you'll eventually end up on speaker view. Whilst usually we would love to hear from you all today, today's session is really short and sharp, so you won't have the opportunity to come off mute or use the chat function. Instead, you'll see that there's an email address above my head, which is productivity@dairyaustralia.com.au, and we're asking that all questions, your comments and your feedback is sent through to this email. Anything sent through there will be logged and responded to either during our subsequent sessions or by written response from our productivity team. Lastly, this session will be recorded and it will be sent out to all of you attending today and also to anyone who has registered. So with all that in check, let's get into the fun stuff. Now, those that know me know I'm a fairly enthusiastic person normally, but I am particularly excited today, and that's because this forum is really the first of its kind for us. Because of that, I would like to set out some clear expectations before we do go any further. Firstly, this research is confidential, brand new, and presented in its rawest form. You are one of the first to hear it and see it alongside us at Dairy Australia. You'll be sent a draft report after today's session to help you understand it further, but it is strictly for those involved in these sessions and you as our audience. Secondly, this forum will absolutely raise more questions than it answers, and we are aware of that. The research presented today is unfinished, in draft form, and hasn't got any clear outcomes drawn to it yet. And this is all intentional, because for the first time, we are presenting unfinished research and wanting you, members of the industry, to bring context to it. And so lastly, this forum isn't about presenting solutions or the answer. It's about a conversation, and each of you here today are part of this dialogue. We want your thoughts, we want your feedback, and we want your ideas on what this means and what we can all do next to respond to it. When Dairy Australia began progressing this piece of work, it was clear that productivity as a term brought with it widespread confusion and misunderstanding about what it actually is. As you listen along today, I need you to know that when we speak about productivity, we aren't speaking about individual farm businesses, which is where our mind immediately takes us to. We are talking about productivity across the industry as a whole, and subsequently what the industry needs to do to increase productivity moving forward. So now that your suspense is at an all-time high, let's delve right into it. Gavin Dwyer, an Associate Director of Marsden, Jacob and Associates, is one of Australia's lead practitioners in agricultural resource economics and public policy review. Gavin and a team of leading economists have been working tirelessly on this productivity piece, and he will be introducing us to productivity more broadly and showcasing the initial high-level findings he and his team have discovered so far. And with that, Gavin, I'd like to hand straight over to you.
You'll see a lot of lines on graphs today, and you'll hear some jargon words, and we'll introduce some economic concepts. But this is about real people making real choices and voting with their feet. This analysis is drawn off 850 dairy farms over 20 years. And we're interested in it because they vote with their feet and they've made decisions about their productivity and their performance, and they drive long-term industry competitiveness. Let's talk about what we mean by long-term industry competitiveness. Often when we talk about industry competitiveness, 4 Ps come up. We hear about productivity, people talk about production, they talk about profit, and they talk about profitability. They're all important, but they're not the same things. Today, we're going to focus just on productivity and profitability. In the long run, profit is the key thing for farmers, and in the short run, it's the key thing for farmers. For an industry, we're interested in productivity and profitability for a very subtle reason, because they're 2 ways that we can get at and help improve the profit of farmers over the long term. So let's talk about this composition of productivity and profitability and what they really mean in an economic sense, and then we'll get to the underlying farm performance results at an industry level. Long-run farm profitability is a really simple concept. It's essentially the ratio of our revenues to our costs and how that's changing over time. Improving farm profitability would mean that the ratio of our revenues is increasing more than the ratio of our costs over time. It's usually comprised of a price effect, which we usually term the terms of trade. And it's made up of the prices of outputs that we receive for our milk and our livestock that we sell. And it's also made up of the prices that we pay for our inputs, such as our fuel and our fertiliser, our livestock, tractors, machinery, etc. And if we've got milk prices and cattle prices rising faster than those input costs, we'd say our terms of trade is improving. On the other hand, if they go the other way, where our input costs are rising faster than our output prices, we would say that our terms of trade is weakening. The other component is the one that we focus on today, and it's called the productivity effect. The productivity is a simple but actually subtly complex idea. Productivity is simply the ratio of physical outputs to physical inputs that we produce on our farm. So, for example, the kilograms of milk, fat and protein that we produce, and the kilograms of cull cows and bobby calves, etc., that we produce, divided by the quantities of fuel and fertiliser and so forth that we use on our farm. And we've used Dairy Farm Monitor and QDAS data to calculate those quantities of outputs and those quantities of inputs. And we're interested in that because what we want to understand is how that's changing over time, because its change will influence our long-term profitability. And we're interested in it because we can understand a number of key effects. The first is we can understand the technology change effect, and that is just this overall ability of technology, and that's not just machinery and equipment, but it's actually ideas and ways of doing things, how they shift the possibilities of our inputs to create outputs, so our boundary of what is technically possible. The second idea that we look at in this form of analysis is called technical efficiency, and that is how close we are as a farm to that technological boundary of what's possible. And that's influenced by things like our skills, our labour, our education, extension, and so forth. The third component is scale and mix effects. Scale is simply the overall size and wherewithal of our farm, and that can influence the ratio of those inputs and outputs that we can produce. And mix is the idea that when we're at scale and when we've become technically efficient using the best of our technologies, how do we alter those mix of inputs around within the year to try and change our level of output that we produce? They're the sorts of things we can influence. Then we've got this external effect, what we might call the environment, and it's made up of things such as rainfall, temperature, humidity, topography, soils, and so forth. And in this study, what we've been able to do is break that out, looking at temperature and rainfall. How productivity and prices move with one another is really important for us to understand long-term farm profitability. When we have positive productivity and positive terms of trade, as an industry, we give ourselves a gold star. And that tends to be fairly rare. Sometimes we usually have positive productivity, but a negative terms of trade. As terms of trade deteriorate, we usually respond and improve our productivity. We usually give ourselves a bronze star. Similarly, we might have negative productivity, but that's being offset by a positive terms of trade. And again, we might get our bronze star, but a bronze star is probably even being a bit generous. Really, it's a question mark. It's a question mark because it depends on the relative scales of how much the terms of trade moves against us or moves for us, and how much we can shift and influence productivity. And when we've looked at this, we've found that for every 1% change in the terms of trade and a decline in the terms of trade, we really need about a 0.25% improvement in productivity. So in simple terms, that means for a 10% decline in the terms of trade, we need about a 2.5% improvement in productivity. And that can be a big ask, especially when we look at some of the numbers that we'll see in a minute. The more concerning end is if we end up in the space of negative productivity, where our inputs are growing faster than our outputs, and our terms of trade is negative, where our input prices are growing faster than our output prices. And of a concern we see in a couple of areas, there's some indications that some farms have moved into that territory over the last 2 decades. So again, just a reminder here that we're really looking at the composition of the whole of the industry using a large sample of farms to help us understand that. So let's get into it. So generally, we're finding that overall at a national and a state level, overall productivity is relatively weak. We'd like to see these lines increasing upwards over time at much higher rates, and they're not doing that. We're also seeing some improvement, for example, in Tasmania, and just more recently, some improvements, for example, in Queensland. The other thing to take from this graph is that the relative levels of those indexes are quite different across states, which is what we expect, and that's not unusual, and those differences are pretty well known. What's of interest to us as an industry is trying to see if we've got that rate of productivity growth increasing over time. Let's have a look at trying to understand why that's not occurring. So the first thing we do is break out this idea of technological change and the environment. This is our first cut at that, and we've done a little bit more analysis. What we did was took all of those dairy farm monitor farms and linked them to nearby weather station data. So we got daily rainfall, daily temperature and humidity, and we created a temperature humidity index. And we looked at how those changes in those environmental factors affected performance of productivity over time. When we looked at that, we found obviously some big jump outs, like out of 06, 07, out of the drought, and we bounce around at various points along the way with those environmental factors. But when we remember that this has also got a technological component within it, we're not seeing a rise up in technology influencing and creating more productivity over time. We're also finding that when we break this out at a more detailed level, at an environmental level, and we'll show some more of this next week, that when we think about climate volatility, we're not seeing much movement in productivity as a result of that. And that's indicating to us initially that there's probably high levels of adaptation already occurring at farm scale to deal with this increasing volatility that we see in some areas, in some aspects of climate. The next component of productivity that we're going to look at is technical efficiency. And again, this is this idea that as farmers, we can move to achieve the most out of the technology we have on our farm. And we're seeing that that's weakened a little bit over the period. And that's of interest. When we've dug deeper into this, we've found that actually the levels of technical efficiency are extremely high in the industry. Over 75% of farmers are within 91 to 92% of being what we would class as technically efficient using this method. For us, that probably reflects just simply the hard reality of the jungle of survival of the fittest, and that we've seen over the last 20 years a substantial decline in the number of dairy farmers, and we're seeing the end result of that, that the fittest have survived, and that's translating into relatively high levels of technical efficiency. The next component we're going to look at is scale efficiency, and we're seeing a softening of scale efficiency across some periods of the last decade and some recent improvements in some areas in some states. And there's a variety of reasons for this. Scale, the overall size and wherewithal of your farm, brings swings and roundabouts. For example, scale can be used as a means for me to gain better terms of trade. I'm able to negotiate a better milk price by supplying a different market. But the quid pro quo might be that I've got to use more inputs to do that, maintain milk production all the way through the year. And we also need to remember that scale has an upside, that it enables us to fund the wherewithal on the farm for when technology does come along, and it is expensive. We can afford to pay for it and bring it into our farm and incorporate it into our complex system. The other interesting component of this analysis that we've done so far is that when we break it out, we find constant returns to scale generally across the industry. And that is, for every 1% increase in inputs, we have a pretty much corresponding 1% increase in output as a result of that. So scale is not necessarily a tool that enables me to lever large changes in my productivity. And for some, that might be a surprising result. The final component of productivity that we want to talk about is mix efficiency. And that's the idea that when I'm optimized my technology and I'm technically efficient and I'm at the scale that I want to be, what can I do? Where can I move? Because there's not many other choices for me in how I can improve my productivity. And that seems to be what's going on a bit here. Mix efficiency, altering our mix of inputs within the year to achieve changes in output, seems to be part of the reason why we're getting some movement, some slight movements in productivity over time. And what it hints to us is that this could be occurring because we've got some limits in our technology and our technical efficiency. That is, technological changes is not substantially increasing and moving productivity. We're relatively efficient in using those technologies well. And we've got scale that's relatively constant. Well, the returns to scale are relatively constant. So mix is probably where the action is. And next week, we'll unpick this even further and look at this at a regional scale. Finally, I want to circle back to what we originally talked about, and that's the idea of productivity and its relationship to profitability through the terms of trade. We see that orange line of productivity, where it's sort of bumping along pretty flat and seems to be weakening a little bit post the 06-07 bounce out from the drought. What we do see is that the terms of trade are bouncing around a lot. And the terms of trade seems to be the thing that's driving the shift in our profitability. You can see in the dark line, our profitability index, how it's moving over time. And it's had some peaks and it's dropped off. What seems to be happening is that the terms of trade, that is what we're receiving for our milk relative to the prices of our inputs, seems to be the thing that's fundamentally shifting profitability. Now, that's different to what we've seen previously to the previous 2 decades. In the past, what we would normally expect to see is, as terms of trade deteriorate, we would like to see productivity shifting and improving to offset those impacts. As we saw in that graph, in that table early on about the gold star, we don't get a gold star here. We probably don't even get a bronze star here. We're probably here for some farmers in the red cross area. And that's something we need to understand more. Next week, we're going to break that out further at a regional scale and understand that in far more detail.
Thank you, Gavin. A really thorough explanation there about what productivity actually is, and certainly some thought-provoking information on what's happened over the past 10 years and why. So for those in the audience, now you've heard some of the hard evidence on productivity, but you may still be wondering, what does this exactly mean? To help provide some perspective and clarity, I will now seek comments from 3 members of the dairy industry that each come from various backgrounds and each hold a different role. Colin, Tom, and Bill have all had the chance to read the first draft of the report this week, which will be sent to you following our session today. So they have had some time to digest and reflect on what the research means for them and their respective roles in dairy. My question for each of them will be, what are their key observations and reflections from reading the report and the work that Gavin and his team have done so far? So to kick us off, I'll be starting with Colin Thompson. Now, Col is a dairy farmer from Cowra in New South Wales and also an ADF director. So Colin, I'd love to hear from you. Tell us what you picked up from the findings of Gavin's report.
Last Wednesday, Sarah, I received Gavin's much anticipated report into productivity into the dairy industry. And so I eagerly launched into the 70 odd pages of this report, and knowing that I had to provide some commentary today. I wasn't too far in and I began to get this sinking feeling that my level of understanding of economics was probably a little below par here, and some of the jargon and technology that was used in Gavin's report is probably a little above my pay grade. However, I did persevere and come to the realisation at the end of that, reading that report, is that I believe that this is precisely what the industry needs right now, is a very sophisticated, professional and in-depth analysis of where the industry has been, where it is and where it could go. So some of my key observations, I suppose, from the report and from what we've heard this morning is I'm quite interested in this investing in technology. And as Gavin has said, that Australian farmers have been very active in investing in technology and trying to improve the way they do things. However, this isn't necessarily resulting in improved productivity. And so I guess I'd be keen to drill in and to find out just why it is. Maybe it's some of the latest investments are not actually improving the dry matter yields of pastures or crops. Maybe it's not improving the production or labour efficiency, some of those things that we tend to spend money on hoping to get a result, but maybe we just need to look harder at some of the investments that we're making. And I think one of the key things here for me anyway is that we invest in skills and knowledge along with technology. Maybe a little example of that is some years ago I was discussing with our herd manager some ways that we could improve repro management on our herd. And we discussed and looked at all the different options there are as far as technology goes, and there's plenty of them. But in the end, we decided that that Aaron would go to the US and spend 10 days there in a very intense repro course, and to look at ways of improving his management abilities. The results of that were quite profound. He came back very enthusiastic with new skills and new knowledge that he put to use very quickly, and we've found that we've been able to hit our targets as far as repro management goes consistently. He's also used those skills to train other employees on the farm. And we actually still haven't invested in herd management technology. Another key message for me is our ability to adapt to changing weather patterns. We know that in Australia that the farming environment it often swings from droughts to floods, and maybe those arcs are becoming bigger and more profound. But we do need to understand and develop farming systems that can cope with that and continue to be able to feed our cows, to produce the milk that we need to produce, and manage our farms. We farm, as Sarah said, in the central west of New South Wales. We have a fully housed freestall barn, and one of the key things for us is to be able to produce food all year round, regardless of the season. It's essential for us that we can assure that our cows are fully fed every day of the year. And so we've developed farming systems and feed plans to ensure that that happens regardless of the seasonal conditions. Another key observation, and as Gavin was just speaking, is understanding and coping with the variations of terms of trade. We know that milk prices don't follow CPI. It's a very different mechanism that sets milk price. And so we need to understand and cope with that. I remember an old fella telling me once, many years ago, when milk prices were around 20 cents a litre, he said if milk prices were 50 cents a litre, farmers would soon make a way of costing 49 to produce. So I really think we need to examine our efficiencies. We need to utilise the resources that we have so that we can buffer these times when our terms of trade are not favourable. Sarah.
Thanks so much for that, Colin. And I'm sure there will be probably many in the same boat as you when they first see the report or see this information for the first time, and that's me included. And so with so many dairy farmers across the country tuning in today too, Cole, I'm sure that your comments and some of the questions you've raised have sung true for many. So thank you.
Thank you.
Now, next I'll be throwing to Tom. So Tom, I've known Tom for a while. He's a farm consultant based in Northern Victoria, and he works with many dairy farming clients really based right across Australia. Tom, I'd love to hear your observations from what you've heard and read so far of Gavin's work.
Yeah, this productivity report has been good because it's helped to bring to light what many of us have suspected, and that's basically that productivity in the Australian dairy industry has stalled a lot in the last 20 years, and also that we need to have that increase to be able to remain competitively globally. So Australian milk price is still largely set for what happens worldwide, and so we need to be able to compete against the other key countries, and productivity increasing is going to be a key strategy to be able to do that. If I look back at the dairy industry over the last 40 years, if we look back 40 years ago, the typical Australian dairy size herd was 120 cows, so much smaller than it is today. Feeding grain was just starting as a result of the 1981 drought, so most farmers weren't feeding much grain, didn't have good nutrition knowledge, and their overall knowledge of things like fertiliser and pasture management isn't as what it is today. If we go back about 20 years ago, so the turn of the century, the typical Australian dairy herd size was around 180 cows then. The knowledge had improved greatly in that 20 years period, and that's largely on the back of some really good research development extension programs. And in particular of note was like the Target 10 programs that come out in the 90s that was nutrition, pasture management, fertiliser, those sorts of things. They greatly improved the farmer's knowledge and management ability, which translated into those productivity gains, or as Gavin mentioned, the technical efficiency improved greatly. So a lot of that low-hanging fruit that the industry could harvest was done through that period of the 80s through to the early 2000s. As of today, the dairy herd sizes continue to increase on an average cow like farm scale. So about 280 cows is typical average size now, but that average is made up of a big variation. The number of big farms over 500 cows has increased dramatically. And what that's resulted in is that employed labour is becoming a much larger part of the industry than what it was 20 or 40 years ago. And with that, we've seen that the labour is now becoming one of the biggest limiters on farms. So the quantity and quality of labour is coming into it. And that has seen a lot of farmers and research, both from the private and public industries, is really now focusing on that labour component of it. So an example of what I'm trying to say there is things like the cow collars for rumination, heat detection, or ear tags. That's come into the industry. It's one of the key parts of technology that's getting adopted now. And really, see, that's not being adopted on farms to try and get a productivity gain, but it's to try and compensate the labour issues. So trying to reduce the reliance on staff to be able to heat detect, pick up sick cows and the likes, is why that technology has been adopted in such a focus. If they can get productivity gains out of it, it's almost a bonus for them. Same could be said for the robots, so the robotic milking. Not likely to see a huge productivity gain out of that. It's mostly, once again, drawn by the labour issues that many farms are experiencing. And in fact, one of the biggest headaches for those guys going down those routes is actually maintaining the current productivity, let alone increasing it. Something else that I noted out of the report, which it wasn't an absolute concrete conclusion, but it appeared that some of the other countries, the key dairy nations such as New Zealand and the USA, have also had their productivity issues as well. So if we look at New Zealand, for example, the reason they're of interest to me is that they're another grazing-based nation. So most of their farm systems over there are based on grazing. And why the research hasn't been done to the same extent as this new report is, it appears that they've stalled as well in their productivity. So they've had a similar trend to Australia, had good growth 40 to 20 years ago, but the last 20 years ago it's largely stalled as well. Whereas another one to look at is the USA. So most of us have heard about the issues in America regarding profitability over there, but regardless of that, they seem to have been able to continue the productivity gains. But largely they use different farming systems over there, as in they're more feedlot and intensive feeding based, and they've still seen those growths continue. So it leaves me to ponder the conclusion that potentially that it's the pasture based, the grazing systems is where the technology or the productivity is holding us back more so than the cow and the nutrition side of it. And that could be also part of the reason why we're seeing more and more farms in Australia start to consider going down those more intensive systems. Another thing to think about is that there's been a really big game change technology potentially come out in the pasture-based thing in the form of GMOs, but we're unable to adopt them. So it's a lot of investment and effort's gone into those, but we haven't been able to adopt them due to basically policy. So hopefully this report can help focus the industry on the importance of the RD&E and also where to put the effort. So where the biggest need and the biggest gains could potentially come from. So thank you, Sarah.
Awesome, Tom. Thank you. And again, some really great insights there. Tom, you work with a really wide range of farm businesses, and I think your examples certainly help us understand what productivity includes, and in particular, what technical efficiency refers to as well. And I agree with you. I certainly think the report is going to help us focus, where we put our efforts moving forward. Thanks, Tom. Now, last and certainly not least, I'll be coming to you, Bill. Now, Bill Malcolm is a name so many of you will know. He's a researcher and a teacher of agricultural economics at Melbourne University and has been involved in the dairy industry for a very long time. So, Bill, as a fellow economist, what's your perspective on Gavin's findings? Sorry, Bill, we might have you on mute there. We'll be missing pieces of gold too. All right.
Let's face some brutal facts. There are a lot of flat lines in that report. Now, like farming is a competitive caper and the race goes to the fittest, but the key to being fit, to being competitive, is productivity, because long-run profitability comes from production and the terms of trade, as Gavin explained. We can't do anything about the terms of trade. The traditional key to success in Australian agriculture, not just dairying, was to increase productivity at a rate that offset a decline in the terms of trade. That worked for a long time. It works for other industries. What's happening here? So congratulations first to Gavin and Chris O'Donnell. A lot of people won't recognise that this is the first time such sophisticated techniques have been used to analyse what's really happening in Australian dairying. And it's the first time we've been able to break down the productivity gains, or lack of them, into technological change, technical efficiency, scale, and environment. Now this is really big because, as Gavin said, farmers are all over the technical efficiency. Those who manage to stay in the game are good, and that's a given. So if they're technically efficient, then with the given technology, it's incumbent upon everyone else, the research support, to provide the new technologies that our technically efficient farmers are looking for. And to me, the logic goes like this. The key to productivity is technological change, new ideas, new technology. That's the key. The key to technological change is good research and development. The key to good research and development is good investment in R&D. The key to good investment in R&D is rigorous evaluation of research proposals. The key to rigorous evaluation is good science and economics. So my hope, and using peer review, right? My hope is that maybe if the science and economics has faltered in the past, it might be rediscovered. We used to joke about the wool industry, how science and economics were considered an optional extra. And I would hate to see that happen in this industry. And I don't think it will, but it's not, science and economics are not optional extras. They are absolutely integral to making the good investments and doing the good science that gives us the technological change, that gives us the productivity gains that have somehow flatlined. And look, there's so much evidence out there that good investments in agricultural R&D will give you 10 to 20% return on capital, better than almost any investment in the economy. So why aren't we making the good ones? Because we know how to do it. We've done it in the past. Okay, and there's a lot of knowledge about how to make good investments, how to evaluate research and development proposals. But let me, and by the way, I endorse Tom and Colin's point, it's also investment in human capital. That's all the technology in the world is no good if people don't know how to use it. So human capital is just as important. I'm talking about new technologies here. So why haven't we been making these investments? Because that's the price we pay, is erosion of our international competitiveness, erosion of the industry as other industries do better. As I said, competitive caper, if you're not fit, you lose the game. So what's happened? Have our dairy research portfolios become somehow unbalanced? And it's plausible that we've gone too far towards applied research as against basic research. Applied research is dealing pretty much with the known, and you always have this tension between research and development. Maybe that balance is wrong. Maybe my science colleagues will have heard me say many times that often their belief that their single discipline is the answer is not quite right, because it's no one discipline can provide an answer. It's the mix of disciplines, solutions to parts and not solutions to wholes. And so if you're an agronomist, say agronomy and genetics, neither one alone will provide an answer. Genetics will give you, continual improvements, but they're slow and small. Agronomy can give us big and fast improvements. So we'll get that balance right between different disciplines in our research emphases. Even worse so is if the response to this was to say, oh, productivity is really struggling in the dairy industry, marketing is the answer. If marketing is the answer, don't ask me what the bloody question is. That's nonsense. Farmers' hard-earned R&D levies and taxpayers' hard-earned tax dollars ought not to be wasted on marketing nonsense. It has to go into productivity research. So that's a strong message I'll give to every RDC in Australia. Okay, so I'm not just identifying the dairy industry. Marketing is not the answer to anything because we're an exporting country, etc., etc. I won't go on. But finally, as well as the R&D deficiencies, our system's somehow going haywire. You wouldn't think so because farmers know their system better than anyone, but just maybe we're moving, some of us have moved to systems that will be good in good times and not so good in bad times, but they're not making the most of our natural endowments, which is relatively cheap land able to grow relatively large amounts of grass. That's our comparative advantage. That's the key to us being able to export. Others can grow milk out of concentrates, etc., etc. If we want to export, we've got to put cheap milk onto the world market. So all evidence to me is that more pasture consumed off the fixed input of land, as much consumed off that as possible, is really the greater the pasture component in the total diet, the better chances you've got of selling milk internationally. And you've only got to look at the difference in costs of production in states that can grow milk and grass and states that can't. So that's sort of self-evident, but maybe we've lost sight of that a bit. And if we have, it's possibly because inadequate sort of systems thinking or non-economic thinking where we think in terms of averages, and we don't pick up that the marginal tonne of high-cost input, whether it's grain or water, using high-cost inputs to grow low-value milk doesn't really stack up with that marginal tonne, and that marginal tonne may well be reducing profit and raising our costs. So all I'm saying is don't take your eye off the grass ball. That's roughly what I wanted to say. Again, great economics work, Gavin, and may there be much more of it. Thank you.
Thank you so much there, Bill. And I think we can always count on you for some honest perspectives, but they're certainly appreciated. And I think some important, perspectives you've given there on investment in RD&E, but also some insights into Australian farming systems too. And I have to agree with you, it is exciting that we are looking into productivity in this depth. So again, kudos to Gavin and his team. Thank you, Bill, and another thank you also to Colin and Tom. Each of your perspectives are really equally insightful in what this research means for you in the different sides of the sector, but also really helps both me and probably everyone on this meeting digest and understand what the findings mean from a number of different viewpoints, but also for the industry as a whole. So thanks to the three of you. I'm now going to take a quick 5 minutes for a brief Q&A. As I said earlier, we have an email above my head here set up so that you can send questions through at any time, and we'll aim to include them in the sessions. When we started promoting the Productivity Forum, we had a number of fantastic emails come through with insights, comments and questions, and that was submitted ahead of today. So Gavin, I'm going to come straight back to you with a couple of questions. And I'm going to kick off with one that was submitted by Ken Lawrence. Ken is a farm owner in Jindivick in Gippsland, Victoria. And Ken has said, my observation is that over the years, the introduction of superphosphate, urea, ryegrass breeding, AI, and dedicated dairy enterprises delivered large increases in productivity. I don't think we've seen this type of major development in recent years. Is your analysis of the data consistent with his observations? Over to you, Gav.
Great question. Yes, I'd say it's consistent. We've seen it's consistent with the plateauing. Obviously, the introduction of those technologies, if we want to call them technologies, certainly would have increased production. How much they affected individual farm productivity would have depended upon the level that they were used at. There's, as Bill rightly introduced, this concept of marginality, there's always a risk that you can overshoot that, and probably some farmers have. But probably what's happened over the long term is that we've really found over time the sweet spot for profitability there with optimising their level of use. So naturally, we expect that future productivity gains out of them incrementally from where we are going to be small because we've already found them. I'm also just going to quickly jump on Bill's last comment regarding feed systems and intensive feed systems. Certainly the farm systems that we looked at over the 850 farms have got a wide distribution of different types of feed systems. When we did the analysis, we did find a strong negative relationship between the increasing level of imported feed and concentrates to a farm does have a negative impact on productivity performance.
Thanks, Gavin. And it's certainly an insightful, I think, comment and question that came from Ken. And it sounds like he's got a fairly firm grasp on this productivity space. So thanks, Ken, for sending that in. Gavin, we've got time for one more question. So this next one comes from Rowan Bingley, who is a farm owner from Goonua in Gippsland, Victoria again. Now, Gavin, Rowan has asked, if we see a move to mandatory reduction in nitrogen use, which is already happening around the world, and get greenhouse gas restrictions, which will put pressure on the cash flows, will the industry continue to see a contraction in milk production?
Ooh, that's a great question. Obviously, the first thing would be how much where that level is set at is really going to be a critical factor. The second critical factor is going to be, what do we do instead? If we don't use nitrogen, what are the sorts of farm practices or soil management and carbon management regimes might we do? What might that affect our output levels? But also importantly, what additional inputs is it going to create for us? So the answer is going to depend upon the level it's set at and how we respond. And also over time, innovations that will occur because of that. It's funny how when a problem arises for you, you suddenly start thinking about solutions to it that you probably hadn't previously turned your mind towards.
Excellent, Gavin. Thank you. And I think that's a really timely and relevant question that's coming from Rowan, and something that's probably front of mind for many on the call today. Now, I will pull us up there, but please, everybody that is on the line, that email that is above my head here, productivity@dairyaustralia.com.au, please send any of your comments, your questions or your thoughts through to that, and we'll aim to include it in session 2 next week, or we'll get a written response back to you as well. So we are coming to a close today. We want to keep strictly on 1 p.m. so that you've only been here for an hour. But you're probably thinking, okay, we've heard this, so what comes next? All right, let me tell you. Everyone who attended or registered for the Productivity Forum will receive a written copy of the confidential draft economic report outlining the research from Gavin and his team thus far. As I've said before, this is hot off the press, and other than our panel members, you will be the first ones to receive this. I do have to give you a word of warning though. This is a hardcore economic report in its first draft. It hasn't been tidied up for public distribution. So because you are getting the first look at this report, it is in its rawest form. Expect it to be a bit of a tough read with lots of graphs and technical words, as Colin said. And yes, this is exactly what it's meant to be at this stage. Down the track, absolutely, there will be editing, high-level messages, and a reader-friendly version. But for now, you're getting what we have in its purest form. Secondly, I just wanted to mention that today is only part 1 of the productivity story. And I say story intentionally because this all unfolds over 3 weeks, and you won't walk away today with all the pieces of the puzzle. Today, Gavin has given you a very high-level summary of the work so far, and we've had some industry members provide their perspectives. Next week, we take a deep dive into the detail, which is where the rubber really hits the road with exploring what's going on between regions. We know that there's always a bit of friendly rivalry between how your farming region stacks up against the others. So next week, we'll be getting into the nitty-gritty of the fascinating differences between each region, so you can see how your home turf tracks against the others. And then lastly, it's not until week 3 of the forum when we start to talk about what our industry response will be to these findings. Today has really formed the groundwork for the following 2 sessions that unfold. I'd also like to add a quick thanks in here to Gavin and his team for the huge power of work they are doing in this space, and the fact that they are willing and enthusiastic about sharing this information with you as the audience today, even when it isn't completely finished. I'd also like to say a huge thanks to Colin, Tom, and Bill for working closely with us and sharing their insights and perspectives that hopefully gives you all a bit more clarity on what this means for the dairy industry. Lastly, as I've said, your questions, comments, and feedback is absolutely welcomed. The email address above goes straight to our productivity team, and each question will be either used in subsequent sessions or responded to by one of the team that are working closely with this. So please get your questions through, or if you've got thoughts that have been sparked by the conversation today, then please get them through too. I hope you found today's session thought-provoking. You may have found it a bit uncomfortable, or maybe you're left with a million questions and wanting to know more. If you're feeling like this, you're not alone. Join us next week as we continue to unpack the dairy industry productivity story. Thank you and goodbye.